Good afternoon and welcome to the Wall Street Crossover Show sponsored by Admiral Markets and with their market commentator, Darren Sinden.
Good afternoon, Zach.
Right, how are you on Friday the 7th of August, the day of the July non-farm payrolls?
Very well. Obviously very much anticipating the number and wondering what's going to happen, what the number's actually going to be and what that's going to mean. It's been really a week of interest rate and intrigue, I suppose, is how we'd have to describe it. And you know, this afternoon could be one of the most defining moments of the year.
Right. Well, obviously we almost always say every non-farm payroll number is the most important, but this one looks like it really is.
Yeah, there's so much hope and expectation around this number. It could be the catalyst for the Fed to start raising rates in September. We don't think that's the case, but of course we stand to be proven wrong if the number comes out very positively. Okay, well let's go on to our normal agenda, which starts off with the European movers. The data released over the European session, rather. Yes, indeed. So we've had some industrial output numbers today. Starting in France, industrial output for June came in at minus 0.1%, well away from the forecasts of modest growth of plus 0.2% and significantly lower than the prior read of plus 0.4%. So that's the sort of third or fourth worrying data point from France in a row. Perhaps more surprising, though, was the fact that we had a similar wobble in Germany. So industrial output for Germany for June down 1.4% against a forecast of growth of 0.4% and a prior read, which admittedly had been revised up to 0.2%. So what the point I think is interesting to make here is that this conflicts very strongly with the positive factory order data we saw out of Germany last week. And if you look at a chart of the two indicators, they are roughly correlated. So there's a bit of divergence there. We'll assume it could be on a seasonal basis, but again, a concern for the ECB and the German government. And then some slightly better news in the UK with our trade balance for June coming in at a negative £9.184 billion against the forecast of 9.2, so marginally better, though sharply lower than the or higher, depending which way you want to look at it, than the 8.4 billion negative number that we had last time round. So we're still sucking in lots of imports and not exporting perhaps as much as we'd like to, but it is at least beating analysts' forecasts in that respect.
Okay, well, there's nothing that good from Europe so far, but anything good on the stocks front?